Bitcoin. At Tesla, we just became a bit concerned that the big changes in the ratio of dollars to Bitcoins, that value ratio was changing too much, and in case we needed the working capital, it would be better for us not to have a Bitcoin. And now SpaceX still has most of its Bitcoin because SpaceX did not anticipate any working capital issues, potential working capital risks. And, and I was, at one point, it really seemed like the use of electricity for Bitcoin was on the margins really being quite a lot of dirty electricity. And I know people have got all these, rebuttals to high CO2 energy being used for Bitcoin. But there was at one point, I think an entire power station and coal mine in China that was a truly gigantic one that was responsible for a massive amount of Bitcoin mining. Now, I believe that has now been shut down, but I think that actually constituted some insane amount of Bitcoin hashing at one point. I think things have gotten better with just usage for Bitcoin hashing. It's still a little bit of a concern, but it seems not as serious of a concern as it was in the past.
That's analogous to me arguing that electric vehicles are bad because they're powered by a coal power plant. I think you have to divorce the source of the electricity from the actual fundamental good that spending energy to secure the Bitcoin network produces. And that the thing that Kathy and Art are talking about is that, hey, here's a currency that a government can't control. They can't control because you have basically a decentralized distributed denial of service system preventing it from being controlled and co-opted. And the cost of that is the energy you spend.
I don't think they were exactly analogous. In this case of the gigantic coal mine and coal power plant in China, its sole purpose was Bitcoin mining. And it was really not something that would be used for anything other than Bitcoin mining. In fact, when that plant went offline, there was a massive drop in hashes per second for Bitcoin. That's how you could tell it was that plant. That was problematic. It went too far at a certain point. Now, like I said, I think at this point it is better. And when you look at electricity usage, when it's not being pushed beyond reasonable bounds, electricity production is increasingly sustainable, coming from wind and solar with buffering, with battery pack buffering.
Elon, if you don't back the monetary units with work, something that actually takes energy, as opposed to keystrokes, I just don't know how you can build a better system that actually pegs fiat currency around the world without some type of proof of work mechanism.
No, I'm not saying you couldn't have some proof of work mechanism. I'm just saying that, and look, I don't want to, on this call because Kathy asked me to be on this call, not because I'm wish to argue about Bitcoin.
I still do think that this is an important.
If we get into annoying Bitcoin arguments, I'll sign off.
I think, Elon, you kind of raising some of these concerns, I think is part of the education process for understanding Bitcoin. This is exactly why we have these conversations. We don't necessarily need to go back and forth, but maybe I see Harry's actually on the line. He is a Bitcoin miner, perhaps kind of setting up the case for just energy and Bitcoin and how you're effectively converting electricity into a hard asset. For perhaps might help as a framing.
Hey, Yassine, thanks. Great to be here. Congratulations, Kathy, the entire ARC team. We've actually been through our own SEC process in the last 2 or 3 weeks as well and got approval to take Grid public. So
congratulations.
We're in good company with you, to say the least. I want to address just the energy thing in general, because I actually think Elon sort of is right about the more fundamental heuristic, which is that Bitcoin provides a revenue stream to energy generation assets that they wouldn't have otherwise. And so on the one hand, that can create, perverse negative dynamics and externalities when it comes to a one-off coal plant or several one-off coal plants that are getting shuttered, whether regulatorily or financially, and can breathe a second life into assets that maybe, we as a species would argue against. I think that's true. And I think that's negative. I think that the positive tailwind that Bitcoin mining as a totally orthogonal purchaser of energy actually carries the positive day net, because there's an enormous amount of opportunity. If you look at the interconnect pipeline in the US, for example, there are wind and solar farms that are waiting multiple years just to connect to the power grids to be able to enter their renewable energies into our markets. And they're unable to, whether for regulatory reasons or system engineering reasons. And so you're able to bring a Bitcoin mine to that generation asset and start clicking revenue much earlier. It means that the ability to finance these projects is significantly expanded. It means that the infrastructure costs that get passed back to ratepayers get to be lower because those revenues get brought to market much sooner. And it does a lot less from an eminent domain, where do you bring the lines, those types of environmental and
We hope you enjoyed our latest clip. Now we want to give you our perspective. Tap the like button, subscribe, and let us know what you think in the comments. When it comes to the IR workings of banks, cryptocurrencies, and the financial prognostications of industry titans like Elon Musk, it's a swirling vortex of complexity. And often, the public is only privy to the tip of the iceberg. Take, for example, Musk's recent comments on the bank's equivocal relationship with cryptocurrencies, specifically when it involves Bitcoin's volatility and its environmental impact. Musk, who temporarily halted Bitcoin as a payment method for Tesla due to environmental concerns, highlights a crucial point: the energy consumption of Bitcoin mining. Indeed, the revelation about a coal mine and power station in China devoted solely to Bitcoin mining demonstrates the magnitude of this issue. However, let's unpack this. By voicing concerns about the dirty electricity used by Bitcoin, Musk isn't condemning the cryptocurrency itself, but rather he's calling attention to the significant and unsustainable energy resources it devours. The shutdown of such a mining operation in China is a laudable step, but it also unveils the larger issue at hand. Cryptocurrencies can have a profound environmental footprint, one that needs urgent addressing if they're to become a sustainable alternative to traditional banking. This brings us to another perspective, often touted by crypto enthusiasts: the fundamental value of decentralization. Cryptocurrencies, by design, promise a financial system free from government manipulation, a prospect that has garnered a global following. The decentralized distributed denial service system, mentioned by Musk, isn't only about ensuring the security of the network, it's essentially the backbone of the whole uncontrollable by government philosophy. The cost of energy is seen as the price paid for this new kind of financial freedom. While this argument does hold water, one has to wonder if the environmental cost is worth the benefit. In pointing out the single-use nature of the Chinese coal plant, Musk hints at a recklessness within the crypto mining industry. Can we really support a financial system that may contribute to environmental degradation? So, what are they not telling you about the banks and Musk's marked cryptocurrency, XRP, in this context? They're not telling you that the future of finance is not just a matter of selecting the right currency or the most futuristic technology. It's fundamentally about finding a delicate balance between innovation, autonomy, and the environment, a balance that doesn't leave our planet as collateral damage in the quest for financial evolution. Financiers and technocrats alike need to face this balance head-on, rethinking the way we approach both banking and cryptocurrencies. The need for transparency in these discussions is at an all-time high. Strategies like green mining and alternative energy sources for Bitcoin are starting to take shape, and these developments should be at the forefront of financial discourse. It's not an easy journey, but it's essential for building a sustainable and equitable financial infrastructure that can stand the test of time and ethics, which, regrettably, the banks and even some innovators have been tight-lipped about until now.